Hello and welcome to the Wolf of Future Street. This is your Wolf speaking. Tighten up your seatbelts and let's go on exploring a couple of trade recaps. We are looking at gold. That's what I've traded today. Today being the 22nd of May 2024. Yes, I am trading early morning because I'm up and running during this time. This is my typical uh, time to trade, and I love pre-market sessions. I love the fact that I can trade the Frankfurt Open, which is at 2 o'clock. I love trading the London session, opens at 3 o'clock, and I am basically in front of my charts from this time onwards anyways. And the good thing is that gold has been on a tear. It has produced pretty good price action that I've captured through my patterns. So two trades, you can see the first trade right here, which is this bit here, and the second trade, which is here, and this bit here. So let me go through them in a little bit of a detail. So my trades were basically C15, C5 and S1. That was the first trade right here, and then I had a C15, S5 and D1, which was this boy right here. Alright, so C15 again, I basically look at this indicator here, and my primary aim is to wait for the colors to coordinate. So you can see there were two lines, green and red, and at around midnight both the colors kind of coordinated finally. So from this point onwards I want to look for trades on the short side. So this is clean 15, clean meaning both these colors are below the zero line. You can see this is not clean, they are not matched. So clean 15, correct. And then I would look for either a clean 5 or a single 5. So in this case at that time we were clean 5, both are red, and again you can see that they would have happened, the red would have basically happened much before the 15-minute chart because this is the 5-minute chart. Right, so clean 5 happened, we're good to go here as well. So if there is a clean 5, we would either look for an S1 or a D1. In this case a D1 was very low probability and S1 was high probability because of the way the 5-minute lines were. They were deep below, so it's very difficult to get D1s. So S1, so what is S1? You can see we were on clean ones and then we had a pullback, and then that means there was in a sense they are not clean and then they finally meet back, so that's an S1. On S1 the entry is at the 40 EMA, which is right there. This is this dotted line here, that's the 40 EMA. S1 means entry on the 40, D1 means entry on the 200, which is what I marked here. Okay, so first trade was C15, C5, S1, perfect, 10 on 10 trade. And then all of this was happening. Now you may wonder, and you can actually look at this chart and say, hey, why would I not take this down, all of these down, right? And the point is very simple. I think this is what the difference is with regards to a newbie versus someone who has been staring at the charts for days and months and years on end. Uh, I know and my friends know that once price is trying to knock down a certain level, and if it can't, like you can see, even before I took this trade, gold was trying to break this level for a long time, right? So I know that this is one pullback which is good and you can take this trade, but once you kind of take this trade, I need to wait for a much larger or much significant pullback, and I would rather basically defer to the 5-minute chart or even the 1-minute chart, but you will see why and I'll give an example as well of why I would be focusing on these charts and the moving averages, the 200 EMA. So you can see here that price tried to break, and then we had a large pullback. So I've become used to looking at these pullbacks, and when that pullback happened, you would have thought, hey, I got a double one, which is actually a good sign, but I still did not get into it because I was looking at the formations. This is where the double one actually happened on the 1-minute chart. So this is exactly where the double one was, and I can tell this to you even without looking at a 1-minute chart because I've got used to it. And I saw that the MACD was actually acting a bit funny. It was red momentarily and then it ran up, and I'll show you why I was not happy to take this trade up front. I actually wanted this pullback to go right up till here, frankly, okay, and then pull down. So the fact that we are actually not having, so you can see that we are actually not even going to the 200 EMA on the 5-minute is a point of concern for me. I wouldn't want to take any of these trades right now. The fact that I took this one was good, but the next trade I don't want to take because I know that the likelihood of this price going up further to the 200 and possibly to the pre-market open level, and then even potentially reversing back and going higher is now become very high. So let me show you why I say that. And we say that patterns repeat, and I'll show you. So just be mindful of this particular gold move, and let me pull this 5-minute chart to yesterday, and here we go. Do you see what I was trying to tell you? Broke this, second attempt, third attempt, big pullback to the 200, and then what happens? The next moves, pulls back, tries to come down, doesn't even come close, right? Tries to come, goes back again, comes down, doesn't go anywhere close to this level, and then reverse. So I think this is what I mean by the fact that screen time has no substitute. You need to be staring at the screens and understanding price patterns or price action patterns. The fact that this may break down, I'm least bothered. I'm not worried about taking this trade at all because I do not trust this. And if you don't trust a move, it's better not to trade it than to trade it and be nervous about it. So yeah, I took the second trade. The second trade was C15, S5, D1, right? At this point of time, C15, both of these lines are clean. S5, you get this breakdown, which is S, and then D1, both of these guys broke down. That's double one. So clean, single, double, clean, single, and double lines, and that was the second trade. Now the other thing that may be missed out is again the screen time and awareness point, because and this was so important on this trade again, right? Because you might notice that when we broke down, right, we were, you can imagine this level right here, somewhere here, right? And this was the low, right? Now I know that given what I've seen previously, and the fact that we did not pull back to the 200, I am nervous about this move as well, and this move as well, because I need this pull back to the 200. If it had touched the 200 and if it had kind of reversed back from the 200 onwards, I would have got a feeling that we would actually break the lows and go deeper down. But because we did not do that, I knew that we would not get the full end-to-end trade right down to the previous lows. And I had literally marked my exit at this level. Literally, it was basically 2415.9, 2415.9, and we got the last tick at 2415.8. So I was one tick in exactly. And I'm not boasting about these things, or I'm not really trying to say that I'm a hero or some superhuman. It's just, as I said, looking at the charts day in and day out, hours and hours and hours together every single day. So that's basically what helped me to get out at a good place, and that was the second trade. And yeah, that's the recap. Hope you like it. Thanks. Bye.